Good afternoon, everyone. This is the 12-minute trading live market update for Monday, the 5th of December. My name is Doc Severson, and I'm joined here today over here with Dave Lukas of 12-minute trading. And we got some volatility in the market. So after a very quiet couple of months, all of a sudden the big red tape is coming out today and is shaking up the market. Dave, what are you seeing on your end out there today?
I love how we used the word volatility for carnage. I have to say, I didn't expect this. I expected some movement this week. I really did. I expected us to probably drop a little bit to begin the week and then kind of grind higher to the end of the week. I guess that could still happen into the Fed and then break off the Fed again next week and then rally into the end of the year. I've been saying I expected 4,300 on the S&P by the end of the year. Now, sitting at about 4,000 today, that could still happen if we got, kind of a monster rally like we did last year in between Christmas and New Year's. But I'd say today's pretty damaging for that. We're actually way outside the expected move for the entire week on the SPX as we sit and do this now. Now, if you watched Friday, we had a really big rally in the final hour of the day. Looks like the big boy stepped in and bought things back up from that drop down. I don't know if we'll see that today. It definitely, as of now, doesn't quite look like it, but maybe we retake 4,000 to see that. But this, it's like these moves always happen like this. They seem to come out of left field, right? There's no major news events. There's nothing. In fact, the only major thing that I saw today, and I put it out this morning, is the Bank of International Settlements are saying foreign exchange swap positions point to over 80 trillion of hidden U.S. dollar debt reported off balance sheet. Maybe that's driving some things, right? Maybe that's got some people on edge, right? Going into the Fed and everything else. But this is just one of those things that comes out of left field. Volume's pretty good, so it's not low volume. So we'll have to see how the remainder of the week goes. I wouldn't be surprised to see us, head higher during the rest of the week.
Well, we had factory orders today that came out a little bit hot. So that, again, was
yeah, like 0.1 percentage point, though. It wasn't
anti-pivot.
anything that was.
The ISN services was also just a little hot. Again, that's another anti-pivot number. Everything else, though, because I think everybody came to the market today saying, wow, this is going to be great. We have 7 days, the next 7 days with no Fed speak whatsoever.
Fed blackout.
Right. And so this is going to be, we're going to, let's have a good time.
I honestly think this is some distribution and profit taking after the move that we've had. What's the market been up 16% or so since October? This just seems like it just seems somewhat orderly. It doesn't seem like a panic. It just seems like some profit taking, some distribution happening. I think if we continue the next few days and just keep going lower, get to like 38.50 and that on, the S&P, then I think we're looking at something a little bit more sinister. But, I'll have to see, right? We just have to let it play out. It's funny. I have to travel middle of this week. And I always tell my students, it never fails. When I have to travel, the market freaks out, right? So it's doing it early, which is great because I'm in for another day or so before we travel. But, this just seems, it seems like one of those distribution type things. I don't see anything major affecting it other than, maybe some profit taking. But again, we'll see what happens in the final hour of the day, right? Do we sell off and keep going lower, or do we get bought back up? That's really the key. How the market ends is the big key today, I think.
Yeah, absolutely. Well, let me bring up the charts here and give some reference now. There's a couple of things that I've been yakking about here for some time, and one of them has been this is the realized volatility up here, and this is the implied. And we've had realized volatility really since the beginning of the month, almost a month of this, where we've had the actual realized volatility has been much higher than what's been implied into it. And this is because of these great, big, enormous moves that we've had, these big accumulation days. But now we're getting some distribution coming in. And again, this is coming in. So this is areas where we have to be really, really cautious of what we're doing in terms of selling options, because quite honestly, we're not getting paid for, or we're not being well paid, I would say, or overpaid for the risk that we're taking. So that is one thing that we talked about. Now, something else that I think here, just in terms of the daily chart on the S&P, is we've been in this, the S&P's been in this nice orderly uptrend. And actually, let me bring up the ES on here because this shows, I think, numerically what we have. The last rally that we had back from early July up to mid-August was 604 points. Well, the other day we just tagged 608. So we now have a 608-point rally. So we're right at. Okay, so that's OBS is reconnecting. So here's the thing that I'm thinking about is that what I said the other day, and let me zoom in on this so we can see this a little better. What I said was the character of the market when we get quiet and trending uptrend like this, when it switches character to volatility, so volatile and sideways is always what a quiet and trending will transition to. And we're seeing that shot over the bow today. This is just the very beginning of the transition to volatility. So it can actually break to the upside from here, or it can break to the downside. We can go in either direction, but the transition to bigger volatility is always happens first before the big break. So what I'm not expecting to see at this point is just a straight puke down from here. Normally what happens is we'll start out, we'll bounce back up, and then it's the lower high that we have to watch out for. Any kind of a bounce from this trend line up to a lower high is going to be potentially the move that you want to avoid from this point. But otherwise, watch the trend line, watch the bounce to the lower high. If we do close below that trend line, that's somewhat fatal if it closes below 39.50 on the ES. And that means that any bounce up is going to be back testing the trend line from underneath, and that's going to be bearish. So either way, just keep your options open for what be happening here. And again, it's that confirmation bias that we don't want to get caught up in, because typically what retail traders do is they find somebody that they like the narrative of, and then they zone in on that and they don't see anything else. And so we really, truly, honestly could break either way from this point in the next week or two. So keep all of your options open. Know, like, okay, if it breaks above here, probably heading higher. If it breaks below this level, probably heading lower. Need to make sure that we're set up with our hedges.
All that matters is price. Price is going to do what it wants to do.
Price is the only thing that pays.
React to what the price is going to do. One thing I was looking at earlier, and it may not be anything with now 3 days down and today being a pretty big day down after that massive move up last week. It seems like this is a little bit of a bull flag on the daily chart. Are you seeing that? Do you see that as that, or is it just too short amount of days to be able to say it is?
We were in a bull flag until what I was looking for was this to be what I call a high and tight bull flag, like this. So if we had stayed in a high and tight, so this is a great example of the railroad tracks that we typically see before a breakout, right? So, but this is a straight out pullback that we had here. This is a straight out pullback that we had down here. This could be the same thing. This could actually end up slingshotting higher from here. Again, we don't know. We won't know until this sets up with a lower high and it either breaks down or breaks higher from that point. So I think we're a couple of days away from actually knowing that. But I don't think we're in a bull flag right now. If anything, it could be more of a triangle, but it's a definite transition into a larger volatility pattern.
Could be the market freaking out a little bit before the Fed too, just to give the Fed that warning that it likes to give it sometimes about, hey, you better stay your course. And to me, that was an interesting thing. Powell's move, I was very surprised with, because he all but came out and said, we're going to hike only 50 basis points. Yeah. And then all the Fed governors echoed it just as much. So to me, they're stuck in that now. I do not see any way that the Fed goes 75 basis points after coming out and saying what they've said and done, for a couple reasons. Number one, they would look like idiots. Number two, it would freak the markets out even worse, and freak a lot of people out that, hey, they said they're going to go to 50. All of a sudden they did 75. What is it that we're not seeing? What are we missing, right? And same thing if they went 25, right? If they went too low, then the market's gonna be like, oh, something's worse here, something's bad, right? So this just could be a little bit of that distribution happening ahead of that. It could be, some people taking some risk off the table, that sort of thing. And then after the Fed, we get that certainty that we kind of already have confirmed, and then, decide where to go from there. I do think that we are in for a rough first quarter of 2023. A lot of people, are saying, oh, there's all these stats that show, hey, if you have a big October, it's a bull killer or a bear killer, and you have all these other things that when the S&P's done this after this, well, usually the next year it's up 18% and all that stuff. And maybe it will be up at the end of the year, but I think everything the Fed has done, 7 months, fastest rate hike clip in history. And we were going through this. We had our mastermind meeting the other evening. We were talking through some of these stats, right? For example, people's savings are gone. All the stimulus check, all that money, everything is gone. Credit cards have shot up to the highest level that they've been in years, with people putting money on credit cards and going into debt, right? Car delinquencies are going up. All these things are starting to happen, and the impact of the Fed is always lagging by several quarters, right? So we haven't really begun to see the brunt of what this Fed has done. And I think we're going to start to see that in the first quarter. So I would not be surprised, again, to see a run up into the end of the year. Maybe it's not 4,300. Maybe we just get back to where we've been, right? But to see this market really have some trouble as all of that really sets in and starts to really impact people. We're just not seeing it yet, but I think we are not that far away from seeing it. So that's something we have to be really careful about in the first quarter of next year. And usually the beginning of the year is volatile. We saw it this past year. All right. We saw it this year. So.
Yeah, it's the thing. I think the narrative is like, hey, good news, the Fed's going to start to taper their, I guess not taper, but more pivot in terms of, slow down the rate hikes. And so that's where we've seen a lot of optimism lately. But, by the same token, it's like we know that they're going to go too far. And everybody knows that they're going to go too far, and they know how the end game. Yeah, they already we know what the end game is. The end game is going to be demand destruction and asset deflation. So all of a sudden, what we're going to find is probably next year they're going to be backstroking like crazy.
Here's the crazy thing. Everybody says, "Oh, it's a pivot." It's not a pivot. We're just slowing down the pace of hikes,
right,
which is telling us that we're getting to the end of the rate hike cycle, right? So the market does like that. But here's the thing. Every time the Fed pivots and goes the other way, which would be starting to cut rates, the markets drop big time. And they do that because what that signals is that we have some real problems. We have real recession. We have real, negative economic factors hitting us because the Fed is having to scramble and, reduce rates at that point in time. So you don't necessarily want a pivot unless you're playing for, the downside and you're shortened, because that's where you get a nasty drop to the downside. And I think that's what we'll see. I think that's what will happen sometime in first quarter is the Fed will have to reverse because things will get really bad. Markets will drop. That's when we'll hit the lows of this bear. And I know a lot of people are calling for, 3,000, 3,200. Maybe that's it. Maybe it goes lower. Maybe it stays above there. But I just don't think we're done and have had that true capitulation.
No, we have not had the capitulation yet. Yeah. So again, I guess the thing to take away from what we're saying here is that, we're expecting volatility. Today's move was sort of the shot over the bow, which transitions the volatility so it becomes more unstable. So we may see that move in both directions. We may see a bounce off that trend line. We may see a move into a higher high, but the volatility is not going to just go away. So we are going to see a transition into bigger realized volatility. So from that, make sure if you are selling options out there, make sure you're getting paid well enough for the risk that you're taking. So, and then from there, understand that transition could break in either direction. We could break higher.
We follow your rules and your defense to a T. Do not, it's not the time to be like, I'll let it go, that sort of thing. It's worked before where I can let it go. Follow your rules, be systematic about it. Don't let emotion get in the way. just, price is going to do. If it hits one of your rules, whether it's stopping yourself out, rolling out, whatever it is that you do, just execute, right? Don't belabor it.
Absolutely. Couldn't agree more. So,
Yep.
All right, folks, thanks for joining us here at the 12-minute trading live market update on Monday the 5th. And we'll see if we have we'll certainly have a lot of interest into the market coming into next Monday, because we'll be 2 days before the next Fed meeting. And, a lot of times the market likes to put the pinch on the Fed. They like to move in front of the Fed and kind of like encourage them to do something market positive. So we'll see if that is the case by next Monday. But we look forward to talking with you then. Dave, any final words for the crew out there?
No, just really, today's so far is, right now it's kind of a 1 day thing. If this continues tomorrow, it's something more sinister. That 3950 level, I think, is critical. 3900 is very critical. Again, don't put emotion in it. Just, take action where you need to take action and keep yourself ahead of what this market is doing.
All right. Outstanding. Thanks, everybody. We will see you in the next week or so. Take care.
Bye, everybody.
And there we go.